Hello everyone. Okay. In the last class, we completed with the third module. Okay, and we'll be dealing with the fourth and fifth chapter parallelly. Okay, I'll be handling with the fifth chapter, that is costing and depreciation. Okay, in this today's session, we'll be discussing about the one bit, that is depreciations. What is depreciation and all these things. Okay, let's move. Okay, so here it is. Okay, depreciation, costing and depreciations. So the contents are like this. The concept, what is the depreciation means, and what are the definitions, what is the standard definitions, what are the objectives, okay, what are the causes and how to calculate all the depreciations and its methods. Okay, so we'll be having all these contents in the things. Okay, so we'll go with the one by one. So depreciation. So what is this depreciation? Okay, it is the cost of lost usefulness. Okay, if for example, if you take any product, okay, if you purchased any product now, okay, so its value will be some higher value. Say about if I purchased one mobile, okay, I say about 10,000 now. If you want to sell it for after 2 days, 3 days of use, or the 1 month, 1 year later, the value of the product is going to be down. Okay, why it is so? Because it is been used. Okay, it's some of the technical things have been lost. As the things are used, they are going to come into wear and tear. Okay, so losses are going to be takes place. Okay, so that is called as depreciation value. Okay, what it says, it is the cost of lost usefulness or cost diminutions. Okay, diminutions means reduced in the process, reduced of cost. Okay, reduces. Okay, diminution of services yield from the use of fixed assets. Okay, so as you are going to use the the product or the object day by day, its value is going to be decrease. Okay, so next, what it says, a permanent fall. Okay, a permanent fall in value of fixed asset. Okay, so about 10,000 you have taken, okay, for the mobile, okay, at the beginning. After 1 year or the 2 year down the line, okay, so the value of that product is going to be decrease. Okay, so that decrement value is called as depreciation value. Okay, so how it is going to be reduced, why it is arising? It is arising through wear and tear from the use of those assets, okay, in the business. Okay, so a permanent fall in the value of the fixed assets. Okay, next we'll see. Okay, what is this definitions? Okay, so definition is states that, okay, uh, depreciation is a measure of the wearing out, how much it is being measured out. Okay, it is the measure. Okay, we are going to measure the wearing out. Okay, consumption or other loss of value of depreciation arising from the use. Okay, so next, affliction of time or obsolescence through the technology and market changes. Okay, so afflictions is means that the expiration, okay, the expiration of time, okay, as the expiration of time takes place, or the obsolescence means the way the outdated, okay, outdated through technology and market changes. Okay. As these parameters happen or that takes place, okay, so the value of the product or the value of the goods is going to be decreased. Okay, so next we'll see the definitions. The depreciation is allocated so as to charge a fair proportion, okay, a fair proportion of the depreciable amount in each accounting period. Okay, the amount, the depreciation amount vary with year to year. Okay, down the line it is a time constraint parameters. Okay, as the time increases, the depreciation value is going on increasing. Okay, so first year the depreciation value is 10 rupees. After depreciation of second year it may be 20, 50 rupees. Okay, that much amount has to be reduced. Okay, understand these things the very beginning. Okay, so as it is there, okay, it's gone decreasing. Okay, depreciation includes amortization of assets whose useful life is predefined, okay, predetermined. Okay, amortization means the process of reducing. Okay, so it will be the process of reducing of assets. Okay, reduction in takes place. Okay, reduction in the useful life takes place. Okay, so what are the causes? The causes are like this. The internal causes, wear and tear. The internal causes, how it will be takes place. The wear and tear or disuse or the maintenance, change in the production, okay, restriction of productions, reduced demand, technical progress and depletions. Okay, so these all parameters will lead for the depreciation amount. Okay, so external causes are like this: obsolescence and the afflictions in this are this of times. Okay, next we'll see. So what the objective is? The objective is to get the to calculate the proper profit. Okay, so why to go for this depreciations? Okay, so in order to calculate the proper profit, to show the assets, okay, to show what are the assets we are having, its reasonable value. Okay, what is the reasonable value as of the after 1 year, after 2 year, all these things will be determined by the with the help of depreciations to maintain the original monetary investment. Okay, you have to maintain the original monetary investment of the asset intact. Okay, asset included. Okay, so maintain all that, how much we have invested, what are the returns we are getting. So all these things, monetary investment. Okay, so in order to maintain all these things, we need to go for the depreciations. Provision of depreciation result in some of the incidental advantages also. It is the more advantages also. It is provide for the replacement analysis. Okay, when to replace. Okay, whether we need to replacement of product or not. Whether to go for the second hand or whether to go for the new one. Okay, so depreciation is permitted to be deducted profits for tax purposes. So this will also help in the taxation processes. So next we'll be seeing about the causes of depreciation. how the causes will be it takes place, how the value of the product, okay, is going to be decreased. Okay, so how it is there, it may be of physical depreciations. Okay, okay, so here it is. So here it is, we are having physical depreciations. Okay, so here, sorry, on that functional depreciations, technological depreciations, due to accident, due to consumptions, monetary depreciation, time factor, and deferred maintenances. So we'll be seeing about this next depreciation methods. Okay, one is straight line method. Okay, straight line method, declining balance method, and sum of years digit method. Okay, some of the years digit method and sinking fund method and service output methods. Okay, so these are the methods where it is going to be, we are going to calculate the different depreciation methods. In today's session, we'll be dealing with these three things, these three methods to calculate the depreciations amount. Okay, so here it is. So next, how to calculate this straight line method? So straight line method is also called as the fixed installment method. Okay. So here we are going to fix the depreciation amount. Under this method, the same amount, underline this, so the very important, the same amount of the depreciation is charged every year throughout the life of asset. Okay. The formula is the cost, original cost of the product, residual value, or it is also called as salvage value, salvage value into rate of depreciations. Okay, it may be 10%, 20%, all these things. And one more thing is there, one more formula. So it is there. Okay, it is also cost minus the residual value divided by useful life. Okay, so this is the formula. Okay, example we are having. So on April 1st, 20, the machine was purchased at an amount of 50,000 rupees. The amount is the cost of the product is 50,000. The estimated year of the machine was the 5 years. Calculate the depreciation on straight line basis or depreciation at the 20% per annum. Depreciation amount, how to calculate this? The cost minus the residual value or salvage value. Okay. Salvage. In some books, it is going to mention that salvage books, salvage value. Okay. Divided by useful life. So the cost is 50,000. The residual value is not given, 0. The useful life is 5 years. The depreciation amount is 10,000. You can see here also. This is on based on the uh, or 20% per annum. Okay. These two methods it is there. So similarly, next going with this, okay, depreciation for the first year, okay, 50,000 we have purchased minus 10,000 we are getting first year depreciation. If you want to sell this product, you have to, after 1 year, you have to sell it for the 40,000. It is a worth of that. Okay. If you go on to the second years, okay, this same amount will be coming here. Okay, 40,000 minus 10,000. After second year, the amount is 30,000. Similarly, this 30,000 comes here minus depreciation amount. Okay. The total is 20,000. Okay. Like similarly, this 20,000 over here minus 10,000 is getting 10,000. So the value after the 5 years it is going to be decreased to 0. We'll see the very examples. Right? The company purchases the company purchases a machine worth of 50,000. Maintenance for its steel plant is of 15,000 more on spent on installation, and estimated scrap value after 10 years is 20,000. Okay. Calculate the annual rate of depreciation, the book value of the machine at the end of each year using the straight line depreciation, and also the calculate the depreciation. Okay. Find the collected at the 6th years. Okay. So we'll see this. This is a given problem. Okay. The cost of the capital. Okay, 50,000 is there. Installation and maintenance is there. 15,000. Okay. The scrap values or residual value is okay is 20,000. Estimated life is 10 years. Find depreciation value, book value for each year. Okay, depreciation fund collected at 6 years. Okay, the formula is like this. Okay, per year the depreciation cost of asset minus scrap value divided by number of estimated years. Okay, the cost of the product is cost of the capital plus installation. Okay, so that is 50,000 plus 15 minus scrap value it is giving as the 20,000. Okay, 20,000 divided by useful life is 10,000. So you will be coming with the depreciation amount of 4,500. Okay, so we'll see this book value. So initially the total values installment and cost. Okay, it is 65,000. The first year depreciation is 4,500 minus that. Okay, we'll be getting 60,500. So the same amount comes over the second layer. Okay, 60,500 minus depreciation value. So this minus will be getting equal to here will be getting book value. Again 56 minus 4,500 will be getting 51,500. Okay. Again over here this minus equal to minus 47,000 equal to, so 42,000 minus, so the equal to. This is the same process or carried out for 10 years, and finally here to calculate the depreciation amount, okay, for 6 years. Okay, so collected the depreciation amount into 6 number of years will be collected amount of 27,000. So very simple problems are there. Okay. Diminishing balance method. Okay, so diminishing balance method, it is also same kind of things. So it is changed according to the fixed percentage. Okay, it will be according to the percentage type. Okay, so here we are having it is also called as return down method. The rate of depreciation remains constant in all year after the first year. Okay, the amount same as in the depreciation in the same as in the straight line method. After the year it changes every year. Okay, so you can see over here the depreciation expenses. Okay, so here it is there. Okay, rate of interest diminishing on purchase the machine at the 5 years or straight line previous. Okay, so depreciation will be decreasing. Okay, So cost minus residual value into rate of the percentage. 20% they have taken out. Okay. So then you have to take. Okay. So next we'll be going with this problem. Okay. An engineering college invests, okay, invest rupees of 10,000, okay, for its R&D, for its R&D processing wear testing machine. The serviceability of its life, okay, serviceable life is of machine is 4 years, okay, service life is 4 years, and its salvage value is 1,000 rupees, okay. Determine the depreciation and book value in each year using declining balance method, and also the amount of depreciation collected at the end of second year. So here it is, the value of C is, value of the formula value of C is, okay, it is 10,000, investment is 10,000, salvage value or reduction value is 1,000, estimated life is 4 years. Okay. So different depreciation percentage we have calculated out to be 43.7 percentage. Okay. So it's the capital at the beginning of each years. Okay. So this 10,000 into this percentage will be getting of depreciation amount of 4370. Okay. So this 4370 minus 10,000 minus 4370 will be giving you 5630. Okay. So again next in the second year 5630 minus this amount 2460 will be giving you 3170. Again 3170 minus this amount will be giving you the amount of book value of 1785. 1785 minus 780 will be giving you 1005. The total amount of depreciation fund collected at the end of second year, the first year is 4370 it is collected, okay, and second year it is collected about 2460. The total amount is of 6830. Very simple formula is there, to substitute. So next it is here, next it is sum of years digit method. Third method is one of the pattern and elimination method. It is charged under profit and loss accounts. We are going to see the profit and loss account. Decreasing every year, the depreciation value is decreasing every year. Okay. So in all the cases, we will be saying the depreciation value is decreasing every year. Okay, so here the formula of some of the digits. Okay, here it is the depreciation base into remaining useful life divided by sum of the year's digits. Okay, sum of year digit is calculated as n into n plus 1 divided by 2. So here it is. The cost of the machine was 45,000 and residual values of the machine is 5,000. Okay, the useful life of the machine was 4 years. Okay, find the depreciation on SYD method. Okay, SYD method. It is given as the single sum of years digital method. Okay, sum of years will be taken. Useful life is 10. You are getting n is 4. N plus 1 becomes 5 and divided by 2. Okay, so it is 2 ones are 2 twos are. Okay, 5 into 2, 2 into 5 will be coming out 10 years. Depreciation base 45,000 originally amount. Okay, so scrap value or residual value is for 5,000. It is giving about 40,000 depreciation base. Okay. With this base will be depreciation base. Okay, and depreciation factor 4 by 10. Okay, next is it is multiply going with the 16,000. Okay, so first year depreciation amount. Okay, similarly third year. Okay, 40,000 into 3 by 10, it is giving you 12,000. Okay. Cumulatively it is accumulated. Okay, 16 plus 12, it is 28. Okay, so next 40,000 as it is 2 by 10 factor, depreciation factor. So next it is the 40,000 into second year of total life. Okay, so it is giving you 8,000. So cumulative is giving you 36,000. Okay, after the end of next is 40,000. Okay, so 4,000 is it is there. So overall we'll be getting a cumulative of 40,000. Okay, totally cross check. Okay, can do. Okay, so finally we are getting with the 40,000 rupees depreciation base. I hope you understood this concept of depreciations, and if you are having any queries, feel free to ask me. We are here to help you and all out. Okay. So please ask for the queries. Thank you.